maybe we could close on just venture in general. I know we've talked about it a good amount, but it seems like it's a relatively challenged. Like Philippe Lafont was talking about it in this. So he's one of the co-founders of Cotu, large asset manager, hedge fund. They do a lot of VC as well, but it was just describing the challenge that VC is going through as an asset class. A lot of it is because there was some pretty irresponsible investing that happened in 2021 and 2022 that we're still working through. A lot of it is because companies are choosing to stay private longer. But either way, it's more and more difficult. And I'm curious. Okay, so maybe Believe doesn't solve, and maybe it still doesn't necessarily make sense for this kind of funding gap for smaller companies that might not be venture scale on the outcome side of things. But I am curious, do you think something has to break in venture if companies are just staying private forever, or no?
Well, first off, I don't think things break in venture. I think
Mm,
firms kind of like live much longer than like you could be a venture firm that is still technically active for a very, very long time before you literally have to shut your doors. Just because these are 10-year funds, you're keeping the lights on with management fees if you have them. And maybe you can't raise your next fund, but maybe you're also just like not going to be able to raise your next fund for the next few years and you're going to ride it out to see if you can raise again in 2 or 3 years from now. That's a long period of time. And so
yeah.
I think the balloons don't pop. They very, very slowly dissipate in venture. And I think that that's what we're seeing. We're seeing a lot of the bad deals, a lot of the bad firms slowly dissipate, not to be able to raise more. They're letting go of people. They're kind of, like slowly trying to land the plane, get capital back to LPs so that maybe in a couple of years they can raise another fund. But
Mm.
in the crypto space, I think things happen a lot faster. And I think you're going to start to see a lot of funds, make announcements or maybe not even make announcements on their fundraises that are much, much smaller than their previous funds just because there haven't been returns. There may be TVPI, but there's not DPI, which is like value in the fund, but not distributions to investors. Or there may be kind of like an institutional bias to wait, to Vance's point, on some of these bills getting actually passed before they commit to the next fund. I think that could very much help from an LP perspective. Um, but one thing that I don't think we've talked about yet, but is kind of going on in the endowment world is there's two things. Number one, it seems like there's going to be an endowment tax. Now, is this 8%? Is it 14%? Is it 20%? They don't exactly know, but there will be some sort of foundation and endowment tax. And endowments, historically, like the Ivy Leagues have the biggest endowments because they've been around the longest. And what they do is they fund the university from net investment returns from the endowments. They've also been probably the biggest LPs in many of the hedge fund, private equity, and venture fund ecosystems. And so, when you get to a certain size or a certain level, the thing is to go to the endowments to raise funds for your fund. And Yale, I think 2 weeks ago, announced that they are selling their $6 billion private equity interests, which includes venture capital, and they're selling $6 billion of it to get liquidity in preparation for this tax and potentially some of the other liquidity issues that they might be running into. And historically, Yale is the first to do anything in the endowment world. They were the first to go heavy into private equity and venture capital in the 90s, actually in the late 80s. They were the first to kind of do crypto from an endowment perspective. And everybody looks at them because of the guy who ran the endowment for the longest time, David Swenson. He literally wrote the
Uh,
book on endowment management. And so everybody kind of looks to Yale as to what is going on. I would imagine just based on the fact that they are selling that there will be tens of other endowments that are also looking to do this. And anecdotally, we've heard murmurs of this actually being the case. So I think there's going to be kind of a sea change from an LP standpoint. In a lot of ways, this probably affects private equity and hedge funds more so than venture, just because those industries are just much, much larger than venture. But I think venture and more of the traditional venture will take the brunt of this as well. It's interesting because venture is also happening. This is also happening in the venture ecosystem at the same time as AI is really booming. And so I think what will probably be the case is it will extend and accelerate the dispersion that was already happening. If you're one of the top 5 or maybe 10 firms in the traditional venture space, if you're, Founders Fund, Sequoia, you're going to be able to raise, and you're probably going to raise more because there will be less investors, but there will be more dollars flowing to you because they won't want to give to the like tier two, tier three, or et cetera funds. They just want to give to the main ones because there's only a certain number of deals that are going to become OpenAI type opportunities. And that I think will more quickly kill a lot of the tier two firms that are probably struggling to raise. Um, and so this I think will happen in the traditional venture space faster than people expect. But I think this is already happening in the crypto space as well. And yeah, it's been interesting to see. And obviously we have, a lot of LPs that we have these conversations with. So a lot of this is kind of direct from source. But it's an amazing time to be in the US. It's also an amazing time to be in the fund management space because everything is changing week to week.
Yeah, those types of very fast-paced environments are really fun, and there's a lot of opportunity. Well, sometimes they're fun for some people, but there's also a lot of opportunity if you're hungry and competent. So nice, bullish framework.
Yeah,
That's awesome.
dispersion is becoming very real.